14th of June, the report for today. Right, Newsy Banks. Today I'll talk about something that could actually change the facade of the dollar directions for the time being until probably 2 weeks to September. Okay, so basically today I want to talk about inflation cools, but Powell stands firm on interest rates. So I think this title alone will give you an idea, the heading that I'm going to discuss about today, and what could that actually mean to the US dollars. Okay, so the Federal Reserve Chair Jerome Powell highlighted the ongoing growth of the US economy and the robustness of the labor market. Now, despite acknowledging inflation is still way off its 2% target, he emphasized that the pace of price increase has significantly slowed. Now, Powell was quick to downplay the recent non-farm payrolls data increase of 272,000, suggesting it might be slightly overstated and hinting a potential benchmark revision. Now, why did he say that? Now, if you look at the data, there was a increment of unemployment. Okay, so you have unemployment going up, but you at the same time you have the non-farm payroll data increasing above the 200K mark, up to 272. This is a great number. So how can you have a lot of jobs and you have unemployment at the same time? So that's why if you look at the data, even when it was released, I was a bit perplexed as well. So it wasn't a surprise that, later on, Powell said that, it might be slightly overstated. So there is something there that probably you see some revision in the next non-farm data. Okay, so that also leads to speculations that say this number here is purposely manipulated for some reasons, whatever reasons. Yeah. So anyway, given the positive economic indicators, it was unsurprising that Powell stated the central bank is not yet confident enough to begin lowering interest rates, despite May's cooler than expected consumer price index report, right? So for the report, in April, the month-on-month CPI rose by 0.3%, while the year-on-year was 3.3%. Now, the core consumer price index increased by 0.2% for the month-on-month and 3.4% year-on-year compared to the previous month's figures of 0.3 and 3.6. Okay, so as mentioned in previous reports, a significant challenge in the Federal Reserve battle against inflation is housing-related data, which holds substantial weight in the CPI. Shelter inflation rose by 0.4% for the month and 5.4% year-on-year. Now, despite a decrease in oil prices, housing costs continue to rise, remaining the primary driver of inflation. Now, until these shelter costs begin their anticipated decline, significant drops in CPI are unlikely. So consequently, right, despite a decrease in inflation, Powell and the Federal Reserve acknowledged that it is insufficient to justify loosening monetary policy at this time. Therefore, it is no surprise that the Federal Reserve held interest rates steady at the current range of 5.25 to 5.5% and revised its outlook for rate cuts to just 1 in 2024. Okay, I will cover this a bit more detail on Monday. I'll let you all know. Now, the key point from the inflation data that we just saw, to see cuts in September, we would needing 3 more months of very friendly inflation. Okay. Now, given these developments, the US dollar is expected to regain strength until the Federal Reserve change just it stunts. So in the short term, I do see the dollar actually strengthening for the time being. Okay, so this is something that you need to look at and plan for going forward. Okay, so but we really need 3 more months of very good data. Then only we can have a better idea and see. But not a better idea, then only the Fed will say, if you have 3 more months of really strong data whereby inflation drops significantly, then September will come into play. But right now, yeah, the chances are not there. But anyway, come Monday, I will cover it in more detail. Yeah, so that's the report for today.